In our four-part series on the key investing themes for 2021, in this edition of Ideas for Profit, we'll focus on renewables and commodities and find out what can investors really expect from this space going forward. Well, commodity prices have been in a bear market for much of the last decade, and that is on the back of the low interest rates. Now, the unprecedented monetary and fiscal stimulus measures undertaken by central governments around the world this time around to counter the financial effects of COVID-19 could cause a reversal in interest rates over the next 18 to 24 months. Now, excess liquidity and surge of bankruptcies in the aftermath of COVID could actually trigger an inflationary wave across major energy commodities, that's coal, oil and gas, thereby paving the way for power generation from cheaper and greener alternatives like renewables. Now, the cost of renewable energy generation has dropped rapidly over the last decade due to technological advancements, cost efficiencies and government subsidies. Now, at present, the production cost of renewables is 30% cheaper than the second best alternative, with the gap expected to widen as we move through the inflation cycle as well. Now, once the inflation cycle really sets in, the cost of power production through fossil fuels will rise with every passing year from here on, causing the energy switch over to renewables such as solar, wind and hydro as a viable and attractive option. Now, renewables are set to dominate the construction of new power infrastructure, with the pace of adoption likely to accelerate after each year. Now, India has the third largest solar power industry in the world. Also, the country has set an ambitious target of 175 gigawatts of renewable energy capacity by 2022, including 100 gigawatts from solar and 60 gigawatts from wind energy. Now, in an effort to push the green energy, the government has proposed to set up at least 25 solar parks and also ultra mega power plants or projects across various locations. And it has also announced the PLI scheme for high-efficiency solar modules from here on. Now, from an investment standpoint, the renewable space has really fallen out of favor, and that is due to the depressed prices and the poor industry economics so far. However, the sector is expected to make a comeback after a long gap of 12 to 13 years due to a combination of macro factors such as policy reforms, global push towards clean energy as well. Now, the companies in the sector present an attractive investment opportunity at the cusp of a new business cycle which will emerge. Now, some of the companies to keep on the radar in this space are Adani Green, Borosil Renewables, also Swelect Energy, NTPC, Tata Power, etc. Now, aside from the renewable space, the incoming inflationary cycle augurs well for the commodities as well as metals, especially when you talk about aluminium, which has additional tailwinds from packaging and automotive industries from here on. Now, while the usage of plastics in packaging is now getting phased out due to the environmental concerns and complex recycling process as well, it is aluminium which is gaining traction due to lower carbon footprint and higher reusability. For instance, aluminium cans have an average 68% recycled content compared to a 4% for plastics. Now, the usage of aluminium is also expected to accelerate in the automobile industry as plug-in hybrid, as well as when you talk about the full battery electric vehicles use 20-25% more aluminium than the typical industrial or the internal combustion engine or the ICE cars. Now, Hindalco is seen to be the biggest beneficiary from this trend, as its subsidiaries, both Novelis and Aleris, are into manufacturing and recycling of aluminium sheets and cans, which are used by beverage, automotive, as well as the aerospace customers. So this is the space that you really need to keep an eye on.